South Africa's GDP grows a meager 0.1% in Q1. We know that the economy grew by just 0.1% in Q1 2025, narrowly avoiding contraction thanks to a 15.8% surge in agriculture. Only 4 of 10 sectors saw growth, with manufacturing and mining posting sharp declines. Consumer spending rose slightly, but gross fixed capital formation fell 1.7%. Without the agricultural boost, GDP would have shrunk by 0.3%. We have now Professor Waldo Krugell, economist at Northwest University, joining us for the conversation. It's a pleasure to have you in, Prof.
Thank you very much for the opportunity.
Yes, great to have you in. So, of course, is these numbers, would I say abysmal number, did it come as a surprise to you, considering Bloomberg actually anticipated a contraction?
I don't think it's a major surprise. The high-frequency data was already pointing to a slowdown. The 0.1% was not good. I think we hoped for slightly more. But if you had a look at the monthly numbers for manufacturing and mining, the public so purchasing managers indices, the confidence indices, they were all pointing to slowdown of the economy.
And what do you think is a major driver? What is feeding into all these numbers across the different sectors? Just 4 posted positive amongst the 10.
I think, of course, international uncertainty played a role. But what we saw with President Trump's tariffs and the trade wars following that, I think we haven't seen that in our exports yet. Exports increased slightly quarter on quarter, though annually the number is slightly lower. I think it's a much bigger story of just a slowdown of investment in response to very slow economic reforms in South Africa. Local uncertainties and the whole debacle that we saw with the 3 budgets, I think that just undermined confidence to an extent where there was very little, or actually a contraction of investment, and as a result, just household spending couldn't carry the economy.
I mean, you're saying that the reforms that are not giving the results, the much needed results, but there was a lot of confidence, right? Business and consumer confidence as a result of the formation of that coalition government, who have been trying to pull through with some reforms. What is your assessment of the reforms that they are bringing forward? And do we need to see some adjustments?
You're exactly right. That there was an uptick, I think, of optimism and sentiment towards the middle of the third quarter last year, and even a slight increase in investment in the fourth quarter of last year. So I think everybody was optimistic that this would be a good year for the South African economy. But the implementation of the plans have been really slow. One example is just a private port operator at the port of Durban. That process has been ongoing for a while, and currently it's stuck in the courts. So it's more than a year after they sort of initially started this, much longer since the idea came up, and there's still no private operator investing in that specific quay at the Durban harbour. So I think there are many of these examples of the plan is fine to say, let's get the private sector to play a role in the railways or the harbours, but the execution has been very, very slow. I don't think we need a new plan. We just need to implement the plans that we already have.
Great plans, but there's need for better implementation. You have said that many anticipated that this would be a good year for the South African economy. Over the past decade, growth has averaged 1%. What are your expectations, right? We already have Q1 numbers, 0.1%. We have Q2 that's coming to an end, in a few. So what are your projections for Q2, and do you still predict that they'll meet up? What are the projections for 2025 exactly?
We started the year predicting 1.8% growth annually for the year, and with 0.1 in the first quarter, we need to grow at 0.8 in the 3 remaining quarters to get to 1.5%, and that seems unlikely now. The PMI data for April and for May shows manufacturing under pressure. I think we'll be lucky to scrape by for a second quarter number similar to this one, maybe 0.2 around there. Maybe boosted by slightly lower fuel prices, a little bit of two-pot money from the consumer side. But on the investment side, there's still nothing happening. And I think even on the export side, it's going to be muted. So we are now looking at an annual projected growth rate of 1. 1 seems optimistic now. When the IMF predicted 1 a couple of months ago, everybody thought they were just being pessimistic. But now a growth rate of 1% again seems like where we're going to be at.
Right, Professor Waldo Krugell. We'll continue this conversation and whether or not South Africa's economy is in trouble and what that means for the rest of the continent after this break. Right, South Africa's disappointing GDP growth rate for Q1 2025. We're seeing 0.1%, and it's mostly boosted by agriculture. We're diving into the details now with Professor Waldo Krugell, who joins us from South Africa, an economist with Northwest University. Thank you for staying with us.
Oh, you're welcome.
All right, let's delve deeper into the details of the numbers that contributed to this 0.1%. As was pointed out, agriculture took the shine. We'll get into why and what's driving that, and whether or not it's seasonal. Let's begin with that, right? The agriculture took the shine, 15%. Is it a seasonal thing? Is it something that can be sustained?
It's seasonal. So it's horticulture, it's some vegetables. It's not sustained. I think there's still some positive growth momentum coming from the summer grains, but they've got a lot of late rain in the northern parts of the country. So harvests are slowly starting, but all the big combines are stuck in the mud at the moment. So at least that'll positively contribute to second and third quarter numbers when the maize harvest and the soy harvest comes in later. So it's not the same part of agriculture, but there's still some positive output left in agriculture for the quarters to come.
All right, let's come down to manufacturing and mining. We know that, one would assume that those are South Africa's strong points. So, but we saw a significant decrease, manufacturing down 2%, mining and quarry industry down 4.1%. What is the drag here?
It's a complicated answer. I think for manufacturing, it's really about demand. The economy isn't building much, so all the steel and things that you would put into construction, there's not a lot of demand for at the moment. And many of the other manufactured goods also struggle with limited domestic demand, and the export demand also not what it should be, considering those international uncertainties. Mining faces even bigger challenges. They've been doing relatively well on the JSE because commodity prices have been higher, if you think about gold specifically, but the others as well. So in terms of their profitability, they are not doing badly, but in terms of the actual production, numbers are falling, and we see that I think actually mining is now in the technical recession. They face many regulatory challenges, and the latest that's actually come on the table in the past week, which wouldn't be reflected in these numbers, is our proposals by the minister that's going to make investment in the industry even more difficult. So I think as a combination of limited demand and some policy challenges, we're seeing mining struggling.
Mining in South Africa, from what you're saying, is experiencing some sort of a recession or near recession. And this, of course, calls the question, is South Africa's economy in trouble? And they're one of the strong hands or strong countries in Africa. What does this mean for the continent as a whole and growth across the continent?
I think the South African economy is in trouble. We've been growing too slowly for too long, and this was supposed to be the year when things were different. And it turns out that we're facing the same constraints as before, and investment is really muted in this first quarter specifically. We are struggling to execute the reforms that are needed for growth. and that's limiting us going forward as well. I think in the sense that South Africa is a buyer of other African exports, at least that won't be too big a drag on the continent's growth exports, simply because we don't trade as much as we should. But it's almost a saving grace for the rest of the African economies that they don't sell a lot of stuff to South Africa. But to the extent that does happen, if we grow slowly, it ends up causing slow growth elsewhere. And I think perceptions-wise, South Africa hasn't got a lot of good media in the US recently. And as an investment destination, other African economies really need to make their own case and not be painted in the same brush as South Africa, either in terms of infrastructure or in terms of crime or in terms of governance, and say that whoever else, we are still good destinations for investors.
I mean, South Africa's economy growing too slow for too long is what you have said, and you have hinted at the larger geopolitics. So one is wondering which way now for South Africa in terms of strengthening the economy. We know that the president did, try to have a meeting, did have some sort of meeting with President Trump. The aftermath of that, which way for South Africa to repair the economy? What kind of reforms do we need to see from the coalition, amongst others?
In a way, I think there's a couple of ideas going on. We all know we need faster growth, but how to achieve the growth is the challenge. On the one side, you have the guy saying that it's all about allowing the market to take the lead, freeing up business, reducing the cost of doing business, liberalizing the services provided by state-owned enterprises, those sorts of things. That's one side of the argument. Get the growth first. But then you have advisors to the president saying all growth plans should first be checked for their impact on equity and inclusion. So if you want to sort of focus on redistribution and hoping that would lead to growth, that's a different school of thought. And I think, to my mind at least, that's what we've been trying is to get to inclusive growth, but we've never seen the growth. And we really need to focus on getting just growth going and starting to create jobs. In the end, those jobs are going to be for everyone. And the sort of requirements that government are putting up, whether it's in mining, whether it's in terms of the empowerment fund that the Minister of Trade and Industry wants to establish, all of those, I say, let's wait with the redress and get the growth first.
Growth first, right? And then perhaps later on you can consider all the inclusivity. We're considering all the numbers that are coming out, from the South African economy. How do you see this impacting or building a case for the central bank when it comes to interest rates?
That's a really good question. I think luckily, though, we are experiencing this weak growth at a time of low inflation. So there's no need to also fight inflation at the same time. The bank's been conservative throughout. They value having inflation low and stable as a driver of future growth. They are unlikely to try and stimulate the economy with lower interest rates. Their view is that there's already enough liquidity in the economy. There's no liquidity constraint. And as such, we did have the 25 basis point repo rate cut last week, but there's going to be no significant cut to really fuel consumer spending in order to fuel growth. So in that sense, there's no help coming from the monetary side. In fact, the Reserve Bank is making the argument for setting a lower inflation target, which would mean slightly higher real rates in the short run. It has long-term benefits, but for the short run, it's not going to come from the monetary policy.
Interesting. Not the best of times for the South African economy, but thank you again for sharing your insights. Professor Waldo Krugell, economist, Northwest University.